Hey folks, today is August the 1st, currently about 8:53 in the morning. Right now we're in the Wealth Generators New York Session Trade Room. So I'm going to go ahead and turn this on in a second, but as you guys can see over the not over the weekend, but the two trades that were open on Sunday both closed in profit. I know they were a little bit down when we started the weekend, but they ended up closing in profit. And as you can see here, we've had one, two, three, four, five trades so far with one loser. And at the moment, we currently have two trades open. So let's go ahead and pull this back up so we can see what's going on in the trade room here.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Have you, or a central bank could be like, hey, we're totally off calendar, way off calendar. We're going to cut rates or raise rates, what have you, and that could really rock things. The other thing that can happen, though, is technology issues. Your internet goes down. Well, now you can't play to call your broker, blah, blah. It takes 5-10 minutes, and then, or longer, or, what have you. And then maybe it's moved a lot against you, things like that. Once your stop's in there, unless the world hates me, my stop, now I'm safe. At a minimum, I know that, okay, this is about all I'm going to lose if I'm wrong. And so it protects you from a lot of things, technology issues or geopolitical things. And it's, they say, oh, that's not that big a deal. Like, no, it's a massive deal. I've seen a lot of money lost. A couple times I've seen pretty good money gained, but from people's internet going down or from their computers crashing. And so I don't know, it's something to look out for because you really, like I said, I've seen it on multiple things. Whatever, I had a client one time went nuts on something, but his side went down, and it took him a while, and then he didn't call us as fast as he should have, but it ended up costing quite a bit of money. But if you place your stop right with your trade or immediately after, then again, you know how much you're risking, not how much you're probably risking, but how much you're risking, give or take a couple pips. Because again, right, your order gets filled, it might not be exactly, it's pretty close, and so you know what you're risking, and there's a lot of peace of mind and value in that, but it's also just from a logistical standpoint.
Attack just went through a bunch of risks there.
Yes. In very real ones, I've seen them all happen. Some of them I've seen happen a whole bunch of times, but I've seen them all happen, and it's a real thing. People are like, "Oh, I'm fine." And it's like, what's that even mean that you're fine? Like, do you control your internet connection? I don't. I control my direct one from my computer to my box over there. But after that, it's all on to, right now it's on to Comcast. Hopefully they don't screw it all up, right? And then from there it goes out into some other thing, over to the broker, over to their system, and then to their ECN thing they're using. And so I don't control all that chain, and even if I did, something could still go wrong. And I don't know, people discount that a lot though, but it's a real thing. It's a real risk, and it's so easily taken care of, right? You just place your stop right away. And it's frustrating when we get stopped out, but at least we only lost what we went in thinking we could potentially lose. That's way better than, oh, I'm risking, right now, what on that? We're risking 16 pips. Okay, do I want to lose 16 pips? No, but would I rather lose 16 pips than 160 pips? Yes, indeed I would. 16 pips, maybe I don't know, maybe they do a double Brexit or what have you. The euro says we're breaking up or something. That would change everything. And that's not going to come out right now, but it could. People say, oh no, it can't. But always assume for the downside. Always assume literally anything can happen. Aliens could land on the White House lawn and start chatting with the president today, for better or for worse. And if you start from there, then you'll actually be very proactive on risk management, because anything can happen. And just protect what you can. And we know that, hey, we place our stops in, barring aliens landing, we're good, or them doing things to our system, right? And that's ridiculous sounding, what have you. That doesn't mean I don't actually believe aliens could land, but I'm from a risk management standpoint, just be proactive is what I'm trying to get at. So place your stop with your order, or right away after your order. Any trade you find, don't just look at the upside. We saw what happened with people with real estate during the second half of the real estate boom, was called the real estate bubble. And people were like, oh, you can't lose money in real estate. First, there's nothing that you can make money in that you can't lose money at. And then there are people like, oh yeah, you just do this and this. Like, okay, so when you're on the hook for $500,000 or for $1 million or for $5 million in property, you don't just do anything. You actually do some work, you find out how it works, and then you go in and potentially do something. And there's a gazillion different moving parts everywhere. But people weren't looking at the risk. All they looked at was that, hey, my friend made this much doing this. I need to get in on that because for a bunch of reasons. One, they want to make money, and two, you don't like your friend doing that much better than you. There's a behavioral bias there, which is sad comment on people, but on all of us, but it's there. And so people jump in on stuff, and they weren't looking at the downside. I literally heard from multiple friends that like, well, dude, no one's ever lost money in real estate. I'm thinking like, yeah, they have. Indeed, they have. And, no one in Southern California up until that point for a decade had lost money in real estate, but that's way different than saying no one's ever lost money in real estate. And so they weren't looking at the downside. We see that a lot where you're like, oh, if I entered here, I see like the next swing high or what have you, the pattern shows that this could go up to here. And they get so fixated on the whatever 600 pip gain they could make that they don't look at like, well, what's my risk? Is my risk acceptable? If say if you're looking for a 50 pip gain, what's an acceptable risk? Well, it depends on a few things. One, are you keeping track of your trade stats? Like how often are you right? Well, what I like to do is go into everything assuming it's a coin flip. I do a lot of things to try to make it better than a coin flip, to make my odds better than 50-50. But I know on any given moment, any given second, the odds are pretty decent either way that the next tick's going to be higher or lower, right? So we'll just call it 50%. So going in with that, and I've gone over before. I've had years anywhere from in the high 30%, 30% being right to like in the high 60s. So it varies, but what varies pretty much around that 50% level. Some years a little better, some years a little bit worse. But in the end, that's not even what matters as much. I mean, if you're like 5% right, yeah, there's an issue. But if you're, 35% right or better, you can still make a lot of money as long as you do your risk reward, right? How much am I risking to how much am I looking to gain? And as long as what I'm looking to gain is some type of multiple of what I am looking to risk, then I can start making it favorable even at below 50%. Right? If you're right, if you're only right, no, if you're right 75% of the time, what can you do? Well, you can theoretically, if you know why you're hitting percentages that high, then you could actually make a teeny bit less on your gains and risk a little bit more. But if you go into it thinking 50-50, what do you need to be doing? Hey, I need to be trying to make 1.2 for every one I'm losing. For every one I'm risking. So really what you're trying to look at are like, 1.5, 2, 3, 4, 5x what you're risking. Obviously we talked about on a day trading time frame, you're typically not going to be able to find 3-to-1 type trades. It happens, but on average you're not. But you're still not looking to make 50 cents to risk $1. That's not an awesome risk reward thing. You're looking to make $1 something to risk $1. And sometimes it's only $1.10 or $1.20, but on a day trading time frame. But the longer you go, the bigger X you're looking for on the upside versus your downside. You're looking for those 3-to-1 trades, those 5-to-1 trades, what have you. But I don't know. I talk about it a lot. Go off on tangents pretty regularly. Risk management, you should and can be. There's so much value there.
So quick note on Euro Pound. Met entry is retreated. It is near the stop. This is among the lower risk in terms of pips that we've taken in a while. Just 16. Normally we're in the 20 to 30, sometimes more than that, 35 plus. But that's about on the outer edge. This is about as low as we go because it's harder to find a real good trading set up in Forex with less pips risk than this. That's not just going to instantly stop out. So this is tight. A quick note: if any of you are on the Simplifier and are looking at that, I have the stop a little bit below this price of 0.8450. Not because it's a contradiction to the stated stop, but because the Forex.com will take me out of this trade simply based on bid activity, the bid and the ask, the quote. It'll take me out on bid activity if the bid falls below that price. I want to get out if it fails and moves and actually trades below that price. So that's why I have to set that stop a little bit lower on that mechanism. Not because I intend to get stopped out there, but I just don't want to be stopped out prematurely based on bid activity. is very important, and that could be confusing to new people. So we can really go into that later if needed, or that would be fine. So please ask away if that's a question you have or you didn't understand what I was just talking about. We want you to be clear on all things. What I'm going to do now while we monitor this, and the pullback is still looking good on the hourly, actually, even if it stops out on this 15-minute setup. We'll keep an eye on it.
All right, guys, we're now 10 minutes into it. It's 9 o'clock in the morning. I'm going to hopefully come back about 10 o'clock and give you guys an update on what this particular trade here is doing. That is the GBP Japanese yen, and we'll also see what the Euro GBP is up to as well. All right, so I'll be back with you guys momentarily. All right, folks, I had to step out here. So it's about 10:30, and we can take a look at what's been going on. As you guys can see, we're at 117 and down only 845 on this Euro GBP trade. So I'll go ahead and let this run for another 10 minutes, and I'll hopefully be able to get this whole session here, or stay in at least until the end. So I'll be back with you guys momentarily. Let me go ahead and let this run.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Pretend that's a daily or weekly chart. Okay, what do you know on the 15-minute? We want to be buying it toward the bottom end of that and selling at the top end of that, right? And you can kind of see how that would work on that one, I think. Again, that was just the chart, not the time frame. But so that's kind of what we're going for.
Folks, I just issued a target for Euro, Pound, EUR, GBP, and I'll make this a little easier. That's in the chat now, but I'll put it on screen here and just put it in a different color highlight. Since I have some other highlight here, just put it in green. But this, again, now a target for EUR, GBP, 0.8490. That would be just slightly a new high on the session. Again, it is up on the day, it's pulled back on the intraday. In that entry, it's kind of just chopping sideways here. We look for a rally up to this prior high and slightly beyond at 0.8490. So that's now issued. I'll update this left side sidebar here in just a few minutes and so on.
Yeah, that's starting to look better and better. Yeah, right after we got into it, it started popping higher, and then it went back down almost to the stop level, but not quite, and it's been getting better ever since. But you can see the symmetry on that, right? How every time frame looks pretty similar and is more or less going in the same direction. Right on the daily, we had a big move up. We've been consolidating. We're starting to break higher on the consolidation. On the 60-minute, more recently, we moved up, and then we pulled back. Because, again, we're trying to get things kind of at a discount. I've heard some people call it, we're trying to buy at wholesale, sell at retail. So we buy at the bottom end of that range, inside of that, and then trying to, hopefully sell at the top end or even higher. And then on the 15-minute, we had the same type of thing, where you could see that pullback was clean enough that you could see it very well on the 15-minute. And so that's like kind of perfect symmetry. Does it guarantee the trade's going to be profitable? No. But on average, is it going to be profitable more often than not and more profitable than not? Yes. So that's the type of thing we're looking for. So I said something that sounded really similar two times. One, it's going to be profitable more often than not. Yes. Okay. The other thing, though, it'll be more profitable more often than not, meaning that the risk reward is better. The cleaner the setup, what I find anyway, is that then when it goes, it typically goes a lot harder and a lot longer than on a lesser setup. And so, say initially I go into something thinking like, okay, I think I could probably make 1.5 times my risk on this. Well, on a really nice clean setup, often enough, I'm going to be able to stay in that trade longer and move my stops up and up and up, in which case I can turn that initial 1.5 times my risk profit setup to a 3 or a 5x type thing. Whereas if it's messier, I might still get my 1.5, but it's a lot harder for that to keep for it to continue running and for me to improve the trade even more. So the nicer, the cleaner the setups are across time frames, more often than not, the better.
Now, part of The art of targets, by the way, is, speaking of, kind of science and art, is assessing the kind of day we have here. I mean, it's sedate, not a lot of movement. Even those pairs that are moving, we looked at Swiss yen, for example, are a real mixed picture. So there's not a clear winner, just in terms of one currency against all its crosses. So euro pound, modest target today, because really price is constrained, and we're not looking for a home run. If this was a different kind of session, if we had the same setup here and it was up 1%, even after having pulled back, and the euro was screaming against all its currency rather than just kind of up against most of them today, modestly. If it was more force and momentum in the market, then I could look for a greater target. Probably also have to take a bit more risk. This is not much risk compared to what we usually take, 16 pips-ish risk. Obviously, that's just an estimation. However, with this kind of session, a modest target makes sense. So just some comments on the target in terms of why it's not that much more than the risk. That's why. That's just the nature of today's session. If you're trading it, then you got to be willing to have slightly reduced expectations on, at least on most pairs. But sometimes as a standout, things can be quite sedate across the board, and there might be one or two pairs that are just absolutely flying, and you can find some good momentum there. Or if you're willing to take more pip risk, you could potentially get more pip gain out of a more volatile pair, out of a more volatile currency pair. Lots of different measures for volatility. One could do something like that. Let's go with this for a minute. Let's do, why don't I do, just think of maybe average true range, for example, on the daily or intraday. Let's go. Give me a couple pairs tag where I should compare their ATR. Maybe a yen cross with maybe the euro USD, something like that.
Right now, you get almost anything against a pound, for instance, right now.
Exactly. Right. Okay.
The pound would be pretty high on a.
Yeah.
Well, you'd have to go like 40, 35 day, but it expands it quite a bit.
Right. So let's insert. Yeah, that's true. In short term, it wouldn't be as great. Let's do kind of a medium term ATR, maybe I was going to say like a 21 session or something like that. So go for average true range.
21. The average month has 21 trading days in it. There's 30-something days, 30 days in the average month, but we have weekends. The average month has 21 trading days in it. That's why I like 21. Go ahead.
Okay, no, good, great comment. Absolutely. I'll make this a little bit easier to see, and I'll copy this and then just and then you'll see the comparison. Yeah, give me a pair that you think I should compare this to, tag, while I fix this here.
Pound yen. I don't know. Just pull up euro dollar even. Though then
that's what I was thinking.
Euro dollar is like a classic.
Something fairly sedate. So let's go with okay, whatever. I was going to copy that chart, so bear with me. Where was I? I was at pound yen. Okay, so I'm going to copy this, paste this window on here. So we're going to have an identical chart, which I'll then change the symbol for. I'll put it right below here for the time being. Let's put the euro here. Get rid of these lines. Well, they'll go anyways. But all right, so the euro in here, and well, maybe I should do not a yen pair because
because
it's going to be harder to explain. So
pound dollar, that's even comparing two different dollar pairs. Pound dollar.
Yeah. Okay. Sure. Good idea. Okay. Good. So let's see. We have the night and day. You have ATR. First of all, what is this green line? This is average true range. You'll hear traders refer to it as ATR. That's different from ADX, not to be confusing, but just to be clear. But this is ATR, average true range, and this will essentially look at the average range over the last X number of days. We chose 21, including any gaps that are part of that range. So if Friday night Eastern time, you have forex pairs close and then reopen Sunday night, and there's a big gap because there was some whatever, any kind of news catalyst over the weekend, that will be included in the average true range calculation. Okay, so what is range? Range is a distance from high to low. So if a pair, currency pair, is pretty sedate, if it's less volatile, then its average true range should be what? It should be a lower number, generally speaking. And you can see the average range changes over time, right? We have a 21 period average range, but it's not always the same range. You can see it, for instance, at Brexit, range expanded. Okay, obviously hugely on that day, and you see the bump up, and the average range calculation gets bigger. Okay, and since the pound in particular has been quite quiet for the last couple of weeks, that has started to decline. You see it come down. But in general, if a pair is fairly sedate, I keep saying, if it's not that volatile, then average true range should generally, even though it's moving up and down, should generally be on the lower side. And the average true range for something that's more volatile, typically day in and day out, week in and week out, should be greater. Okay, so here you're seeing on Euro USD, average true range currently, 21-day period average true range is 0.0077. Okay, so that is ATR for the euro compared to 0.0187. So basically 187 versus 77. You're looking at over 2 times. Over 2 times the volatility just based on this ATR. Now, there's lots of different ways you can measure volatility, period. I mean, we don't have time to go into all of them, and I don't think we need to go into all of them. However, this is just period. It's more volatile. We could look at this in a different way. So expect with the higher ATR pair, expect when you trade it to, on average, take more risk in pip terms, but also potentially have more pip reward. Okay, and conversely, with the Euro USD here, expect in general to take less pip risk, but also have lower pip reward potential. Usually,
we'll go into far greater depth in a future session is with position sizing because of the different volatility. The way I trade is, so if I was in both of these positions, my position in the euro, in the pound dollar, would be half the size of a normal size position. Basically, my euro position would be twice the size of the pound dollar one. Why? Or to equalize risk. I try to equalize my risk with my position sizing, but go ahead. That's a whole other tangent.
No, it is a big other area, but yeah, it's a good comment. Other ways of measuring volatility, which we won't get into today, but I'll just mention them, which is daily standard deviation. This is Euro USD since 2008 to into early July. And daily standard deviation, that's a measure of volatility. Annualized volatility is also another measure. So there are plenty of measures of volatility. Now, unfortunately, I do not yet have a finished pound dollar to compare this to. I could do pound Aussie, which obviously is not an apples and apples comparison. It's going to look about similar, actually, to this. But I will finish those other dashboards as I keep promising, and we'll be able to see apples to apples comparison. But just in terms of ATR, most simply getting back to that, you have greater volatility. This is a nice way if you're wondering, what are the most volatile pairs versus the least volatile pairs. You could add an ATR of some length. You don't even need to see the squiggly line. For example, I could minimize this on these particular charts. I could minimize the line itself and then look right here. Right here where the crosshair is, I can still see that value. Okay, so that's something that you might be able to do in your charts as well. That way it doesn't really affect the price chart, make it too hard to see. The more indicators you put on the chart, as we were talking earlier, the more crowded, confusing it's going to get, and the less you're going to be able to see the price data. So if you can minimize that, that can be good. All right, and of course, as I say that, I'm having trouble minimizing that one. Okay, there we go. So we have, I'll keep that up for a minute. These, these ATR charts, in case anyone has any questions, wants to double back to that. In the meantime, in keeping with this kind of unusually quiet NY pip room session, we're not quiet, but the market is. We're seeing, just Euro pound is stuck in this area. Nice setup, med entry, just going sideways, has not moved out.
All right, guys. So at this point, our GBP Japanese yen trade is looking at just about breaking that $200 mark. Looks like it has already broken it, but we're still trying to get a little bit further down there. If you guys hear some noise, you'll have to excuse it. I had a break-in yesterday, or a couple days ago, I should say. So there are people here trying to work on getting that fixed and everything. All right, so I'm going to go ahead and pause it. We're already at about 26 minutes here. And hopefully I can keep this under 30 minutes, and we'll see what happens. All right, guys, I'll be back at the end of this session here. All right. All right, folks, it is now a little after 11 o'clock. Wasn't able to catch the ending of the room, but we do still have a few trades open here. 2 in particular, so we'll continue to watch this. Like I said, I'm busy doing a few other things right now, so hopefully I'll be able to get some more videos this week for you guys, and we'll just see what happens.